Hi, welcome to this presentation from Analyst Master. This is a new series of uh, daily analysis and weekly analysis of Nifty and Banknifty that we will be doing. I'm Abhishek Bal. I am the founder owner of Analyst Master. So without much ado, let us go along the Nifty and Banknifty and let's see what has happened. So this is the daily chart of Nifty, and you'll see that Nifty has made a triple bottom actually, if you consider the congestion zone here, and it took multiple times, it took support from 14,170, which was the lowest point in the recent times, and then again 14,265. So roughly between 100 points, Nifty was hovering for almost, let's say, for the past almost, let's say, 3 months. So beyond this congestion zone, there was a lot of consolidation, of course, which was happening around, and in between, Nifty formed a perfect M pattern. You could see this M pattern it formed, and then thereafter, once this M pattern was formed, decisively, what actually had happened is that there was a gap that was left between this place and Nifty through this congestion zone in the last 3 months actually filled that gap decisively. And after it has filled that gap, the last quarter results started pouring in for the company, and the inflation fear, which was kind of had gripped the world market recently, got allayed because of the Fed's intervention and Fed's assurance and the wax drives that we were seeing. Of course, the cases are still on the rise, but it is a declining trend that we are witnessing there. All of this put together, it is now moving at a solid uptrend. So you see that this is the trend line that I have drawn, and Nifty is perfectly following this trend line. All right. Friday, we had a solid closing wherein Nifty, after much time, it actually reclaimed its rightful and justified 15,000, and it not only stopped at 15,000, it topped the day at 15,175. Pundits would argue that this is partly because of the banking sector results and the steel and metal sector results as well. Of course, as you know, that SBI had declared a stupendous results, which may be categorized under the earnings surprise. So was JSW Steel. But we also need to understand that this is based on a very negative last to last quarter, which means the Q3, Q2 numbers, of course, for obvious reasons, were very low. They were, and compared to those two quarters, the quarter from Jan to March had a better result for obvious reasons. All right. So from here to where? So before that, let me just also try and take you to the chart where the monthly chart is all about. So if you look at this monthly chart also, it's a pretty bullish Marubozu candle that has formed. And if you look at this weekly chart also, you'll see the same sort of Marubozu candle which has formed. You see that this is the last year COVID era when the pandemic struck and the lockdown was declared, and we were at 7,500. From there, we have practically doubled in the last 12 months, in fact, more than that. All right. So let me also take you quickly to some technical indicators laid chart also. This is the Bollinger Band. And if you see the Bollinger Band, Nifty had already given signal that it is all poised to move up. You see that multiple times after it tested the levels here. For all of your understanding, I will draw the level. So after multiple times, it took the the support here, and from there, once it actually made the up move, thereafter this mid Bollinger level became the strong support zone. Now this becomes a very strong support zone, which means that unless this level is broken, unless this mid Bollinger level is broken on the downside, we can stay bullish, and every dip should be considered a buying opportunity. So from here, now we have tested the new high, 15,175. We are just about a couple of 100 points from the all-time high of 15,400. Let's say 225, 250 points from the all-time high that we witnessed. That was in the 16th of February 2021. And now from here, where does it look like? Well, in all probabilities, if the data are to be believed and the mood is to be believed, I believe that Nifty is now into a breakout mode and it is going to go up. Now, one important thing that we all must understand is that there is a particular property of this Bollinger Band. The mid-level Bollinger band does not quite, excuse me, stay apart for a long time between these two trends, these two ends. So what would happen is that in all likelihood, this is going to move up, and along with that, this support is also going to move up, which means that we're going to now gradually see a higher lows, which again confirms a bullish uptrend that is going to have a solid momentum as well. So if you extend the same logic to the bank nifty, well, the bank nifty is a little laggard in this case, because the top of bank nifty was somewhere close to 37,000. Of course, we have some level, we have some way to go, but then hey, this actually is also a blessing in disguise, in the sense that the upside potential that's being left, that we can ride it and we can reclaim back the level. Let's look at the chart of bank nifty at the larger scale as well. So larger scale, again the same story. It's taking now support after testing the lows, the double bottom it formed here and here, as you can see. I'm talking about this level and I'm talking about this level. So after testing continuously these two levels, once the bank nifty made a decisive move on the upside, it has now started taking the mid Bollinger level as its support. Once it starts taking the mid Bollinger level as support, that means that it is all poised to go up. Okay, and again, if you see, if you look at it, there is a small W pattern that's being formed here, which actually boosts my confidence. At least I don't know about you, it boosts my confidence, which means that we can expect, at least of a position of this size, at this size position, we can expect. So which means that I believe in bank nifty, the next level should be 35,700, which is about 1,100 points from here, which we will see that most certainly, if my calculation, if my hunches are correct, then we would see this before the expiry of next week itself. So all in all, data is looking massively positive. Let's now take a quick look at the option change data, because the charts are geometry, option change are algebra. All right, so if you look at the 15,000, let's take the 14,900 level till 15,500. Now let's see what it says. All right, so if you see 14,900, which I believe is the last support that you can think of, very unlikely, but this should act as a support. There's a massive call under unwinding that has happened at 14,900, 14,950, 15,000 also. You'll see almost 19,000 position. Half of the position was given away because the call writers just do not have the requisite confidence. That on that note, also look at the put writing side. The put writing, there were about 60,000 plus contracts being written, of which 24,000 contracts was written on Friday itself. Okay, all right. Now, the first call unwinding, the 15,100 also, there has been a considerable call unwinding that has happened. As you see, the 9,000 contracts have been unwound here, and against 15,100, you see there's a strong support being built by 35,576. So, which means that the put writers have utmost confidence in this. I won't be surprised if Monday we open at 15,250, which is quite likely. What to do after that? If you see 15,250, trust me, what would happen is that people would start booking their profit, because 2 days of premium decay, nobody would like to carry forward. So they would immediately book the profit, which will propel it back to 15,200, 15,180 level, and then that is the level, of course, to make a new entry in Nifty. Of course, it remains to be seen how the candles form, how the direction of the markets are, and n number of other factors. But this is just a possibility. As we say, the market is all about possibilities and opportunities, not certainty. If there's certainty, then it's not market. All right. So 15,500 is the level where I see some sort of resistance, wherein 58,000 contracts have been written here. Against that, the put writing, of course, is negligible. So the ranges that are coming out is 14,900 to 15,500. That's the range, but that's a little bit on the conservative side. I believe that the range of 15,000 itself breaking would be very, very difficult. Of course, it's market, so nothing is certain. So roughly for the option players, if you are getting the market anywhere between 15,000, 15,100, 15,150, definitely make an entry with a small stop loss of 50 points here for an upside potential of 200, 250 points. All right, so let's take again a close look at what has happened to the Bank Nifty. Well, the Bank Nifty, well, the situation is somewhat similar, and what I could see is that in Bank Nifty we had about 35,000. Well, there's some problem with the option chain. Nevertheless, never mind about that. So in Bank Nifty, my guess is that we will see the levels on the lower side, if it is to be believed, will be somewhere around 33,500. 500 is the level, and this is the level that you can see where my cursor is. Well, I'll just draw it for all of you. Because incidentally, that's also on a daily chart. That's the 20 period moving average, where it takes the support. There you go. Yeah. So this should act as a prominent support, which is 33,352, 33,350. And on the upside, we have, as I said, that another 35,600, 35,700. In fact, I won't be surprised even if Bank Nifty claims about 36,400 also. So your R1 is 35,600, your R2 will be 36,500. So again, play for the up moves. Do not do any short. I would not advise anybody to look in for a shorting opportunity. Hey, this is a market for buying in the dip opportunity. All right, so what about the sectoral data? Before that, let's make a quick dive at the DIFIs and let's see what has happened. Well, the month of May has been surprisingly has been very good. You know, even after the inflation fears that we all were seeing through, so far the FIs DIs put together is about plus 2,200 of net buying. Of course, this figure may not be that encouraging, but considering that what we were from there, what we are now, I think that's pretty good. That's pretty good. It's actually on the beginning of a next jump that's there. And, you know, as I said before, that don't be surprised if you come out with earning surprises across all the sector. Let the Tata Motor 8,000 crore loss do not beguile you. I can assure you that you're going to see some stupendous results coming in. Already Reliance, HDFC, ICICI, all of them have given good results. The banks have given good results. The metal sectors have given excellent results. Pharma sector, of course, nothing much to speak about. We all know what has happened. So what are going to be my choice of sector? So I am saying that everything is positive. Now, my choice of sector, if you are to believe, it's going to be, you know, pharma, then auto, and then bank, and of course the mid cap as well. So if you look at the mid cap on a monthly basis, this is the chart in front of you. Well, we see that the KST, that is the no-show thing, that the trend indicator is pretty positive. The stochastic indicator is telling us that, well, there is some momentum lag which is likely happen, or there is some sort of stability which is there. But that's all right. You know, things can and do not actually move in a straight line forever with the stupendous momentum. It needs to rest for a while. We need to give that time to the market. Okay, so if we just reduce the time frame, just shift the time frame from the monthly to the weekly, wow, this is it. So this is taking the support from the upper end of the Keltner channel. Upper end of the Keltner channel, if it is making a support of, it again boosts my confidence. Of course, there is some tapering of the trend line. There is some momentum weakness that's coming in the mid cap category, but that's not nothing much to worry about. I believe that this is the lull before the storm. Forming the pharma sector. Well, the pharma sector, yes, there is some, the candles are not that great as it looks like out here on a weekly chart. As you see that there is a shooting star and there's a hangman which is being formed at the upper end of the bull engine. But then again, as I say, that look for an opportunity. If you find the pharma sector anywhere between 13,500, 13,550, that's the time to jump into the pharma sector, pick up the choices stocks of yours. It could be Cipla, it could be Cadila, it could be Aurobindo Pharma. I do not know, but you know, look out for those opportunities when the pharma sector comes to 13,500. That's your point of entry. Okay, so what about the metal? Well, now in metal, of course, as I see that there is some profit booking that has happened. Metal has kind of topped out, because please understand that metal is basically cyclical as an industry. and it's going to have its moments when all other industries, basically the manufacturing industries, are in the slumps, because that's the time when the demand actually starts picking up and the capacity is underutilized. So obviously the demand springing up will put some pressure on the capacity, which will enhance the profitability of the sector. That's how the sector works. It's cyclical. We have the realty sector as well, we have the cement sector as well. All of them follow the same pattern. So in as far as metal is concerned, I would be very cautious. If you're already holding your positions in metal, well, I would say that watch out for them. If you believe that you have made enough money in metal, I would rather say that rotate your money, come out of metal sector, put it into banks. Bank is looking fantastic. I'm telling you, bank is not going to rest before it claims 38,000. And before Diwali itself, we will see 40,000 in banks. That's that will not at least surprise me. All right. What about auto? Again, the same thing. It's a beautiful support line that it is taking. It's making a perfect rounding bottom. It made a perfect rounding bottom out here, and now it's again ready to make an up move. So exploit this. Again, Ashok, the choicest sectors, the choicest stocks is going to be Ashok Leyland, Tata Motors, Maruti, Hero MotoCorp. These are the four stocks that I am banking on. Of course, there's some engineering stocks in the sense of Bharat Forge, and some auto insulars in the sense of Minda Industries. You have Supreme Industries, Endurance. Please keep an eye of those stocks. In the month or two or a quarter, all of these stocks collectively, on an average, would give you an upside potential of 25% plus. That's what I'm thinking at. So all in all, that's the outlook. Before we conclude, let's take a quick look at what has happened in the world market. Well, world market, as you see that Dow, well, it's not very encouraging on a weekly basis. On a daily basis, if you see, it's still not quite encouraging, because at the top end it's making a shooting star like a candle, which is not a very good sign. But then we all know that what has happened, because of a lot of data which are coming in, that's not that good. But Fed, for now, for the time being, we are living for a week out here. As I say, that we're talking about a weekly analysis, and maybe going forward the daily analysis as well. So for the week, the inflation fears have been allayed by the Fed, and that's a good news. The dollar index is stable. That's a good news. So that's it from my end. I believe things are good, fine, and India as a story, growth story, is going to continue very good for the coming 6 to 8 quarters. So with that, please keep a note of the levels which I mentioned. In fact, I've put it in the notepad out here. 15,500 is your target in Nifty. It can go heck above of that. But if you're getting Nifty anywhere, at around 15,100, 15,000, 14,900, definitely put your money there. Similarly, in Bank Nifty, your target is 35,500 to 35,800. It could easily climb to 36,000 by next week itself. And if you're getting Bank Nifty anywhere between 33,500, 33,700, even at 34,000, definitely buy. Okay. So that's it from my end. This video was sponsored by Analyst Master. I'm Abhishek Bal, CFA and FRN charter holder. I'm not a SEBI registered analyst. These are for educational purposes only. If you are making your trading activities based on this video, kindly consult your stock and financial advisor as well. I or my channel are not going to be held responsible for your profit and loss. Thank you very much.